The 13th of May, number of the day. Good to have you with us. Francis heard the biggest number as far as oil is concerned. We finally have 1 billion barrels of oil lost. Have I got this right?
It's mind-blowing. This is what the International Energy Agency is saying. The cumulative supply losses. So maybe the oil is there, but it's stuck in the Gulf. This is oil that should have been traded on the global market, and it has not been. And they worked this out because basically last month, 14 million barrels per day that would have come through the Strait of Hormuz and from the Middle East were not traveling that route. And it adds up. It's incredible. 1 billion barrels. And sounds like a song, kind of a billion
I'm waiting
barrels
for a country
of oil
song to come out about that. And the problem is we are nowhere closer to a peace deal being struck. We're nowhere closer to getting the Strait of Hormuz open. So that's the 1 billion barrels as of today. At this point, we have no idea how long this might take. And even once we do reach some, hopefully, peace deal and agreement, it'll take months for that strait to reopen.
Exactly. So this is just another reminder, and we're seeing many reminders, that this is the biggest oil supply shock ever. We've spoken about this before. Some energy analysts are saying the market is sort of underestimating this, and it'll only hit, and I don't want to be sensationalist because we shouldn't be. And of course, there's been releases of strategic oil reserves, but it'll only hit home when the actual shortages, right? And that becomes a prevalent issue. And the IEA, the International Energy Agency, is saying that supply will be less than demand this year. So we went into this year and there was more than enough oil to go around. Nobody was ever going to not be able to buy a barrel of oil if they wanted to. But they're now saying for the year, there will be a problem. And like you say, how do we catch up? So JP Morgan yesterday said it'll take months, even if the war ends tomorrow. End of May, June, because infrastructure has been damaged in the Gulf. There are mines in the Strait of Hormuz.
Yeah, these floating mines, which hopefully people know where these things are.
Well, hopefully the Iranians do, because they could benefit, right, if the war ends and it all opens up. But a lot of Iran has attacked a lot of surrounding countries and targeted energy infrastructure.
Well, if you listen to what the Federal Reserve Bank of Dallas has said, just to your point of how long this could take, and even if it were to suddenly open up again tomorrow, which is, of course, very, very unlikely, just the shipping traffic, there's a few steps here, just the shipping traffic, getting the ships through that strait, because, as you say, because of the mines, could take 2 to 4 weeks. Then you have the oil exports returning to normal. That could take 1 to 3 months, and then even longer, it could be up to 7 months, because the full production capabilities of these oil refineries have obviously been either completely destroyed or badly damaged. So the strait may open, but there's this long tail before any normalization comes around.
1 billion barrels of backlog.
And there's the backlog.
Yeah, and there's the backlog. Because of this, the investment bank, JP Morgan, said yesterday that it expects oil prices to remain above $100 per barrel. And that is the huge implication for us as motorists, as consumers around the world, is that the oil price, which was below 70 before the war began, will potentially stay above 100, and that'll wreak havoc. So even if the war ends, like we say, tomorrow, that'll also have implications for the rest of the year. They're talking about the rest of the year.
Which is going to be interesting politically, and we don't always delve into the politics per se on this particular podcast, but Donald Trump going to be under a lot of pressure. He's got the midterms coming up later this year, and already he's going to be under even more pressure because of inflation in the US at the moment. And this is all feeding into what's happening in the Middle East.
Yes, so inflation data came out of America today, and I've never been so interested in inflation figures from the US. 3.8%. It's highest level in 3 years. Basically, this was since May 2023. This is going to put the pressure on. And let's just end there, that analysts are often pointing out that Americans are very sensitive to gasoline prices at the pumps. And US President Trump came in on a ticket to bring down those oil prices. So it's looking unlikely, even if the war ends, because right now the cumulative losses, what has been lost to the global oil market, 1 billion barrels because of the war.